Hey everybody, Economic Ninja here. We're going to be talking about something today that's very interesting to me. I think it's something that is brewing very quietly in Wall Street. You're not going to hear about this for some time, but I think in the next year and a half, maybe 2 years, you're going to see an implosion of the market, and this is going to be all over the newspaper headlines. So what we're going to be talking today is CMBS. So without further ado, let's do this. Hey everybody, Economic Ninja here. First off, we're gonna be talking about CMBS, but before we do that, if you wouldn't mind throwing a little thumbs up, like button. If you've been watching me for a while and you like the content, that would really help me out. Also, if you haven't subscribed and you'd like to subscribe, that would be so awesome. If you just tap the subscribe button, really helps me out. Get this information out to the masses. All right guys, so we're talking about CMBS. Just so you know, if you've never heard that term before, it's an acronym for Commercial Mortgage Backed Securities, all right? Now, a lot of us have seen the movie The Big Short, and if you haven't, I highly suggest watching it, but I wouldn't watch it with your kids. There's some things in there you wouldn't want to see, but it's a very great movie because it attracts Michael Burry and a team of men that understood that the mortgage-backed securities of 2006 were completely toxic and they were gonna lead to a meltdown in the housing market, okay, which we obviously saw. That was fueled by a bunch of other things, but that's pretty much the quick and down and dirty thing of the movie. So mortgage-backed securities are on everybody's mind now because it's what led to the crash of Lehman Brothers, ultimately closing them down, and a worldwide recession occurred. Now, there was a couple different things from that. You have mortgage-backed securities, but really that crisis was fueled by the subprime industry. Now, subprime loans, just a really quick brief thing. You have the prime rate, which the Federal Reserve sets, and in the later part of the run-up, the real estate run-up of the early 2000s, what had happened is homes were getting too expensive, like they are now, and banks had to figure out a way of loaning money to people. So what they did is there was this product called subprime, and for a very basic introduction to that, they would say, okay, your prime rate is at this percentage. Normally banks take the prime rate that they go and loan money from the Federal Reserve, and then they add on their margin, and then they loan it out to you so you can go buy a house. And they said, you know what we're gonna do is we're gonna give you a couple different payment options. Usually it was 3. It said, you're allowed to pay interest only underneath the prime rate, or then you can pay interest at this other rate, and then, or you could pay principal and interest, right? And you had 3 different ways of paying, which means it was a cluster, to be honest with you. And I knew a lot of people that bought these subprimes, and I used a couple subprimes for flip properties. I still paid the principal and interest, but I wanted the flexibility to go lower if I needed to, dealing with my cash flow situation. Totally different thing, but I knew back then what I was getting myself into. So anyway, this led to the mortgage-backed security crisis. Well, now there's a whistleblower out there right now blowing the whistle. His name is John Flynn. He's a veteran of the mortgage securities market. He's been in the business for, I want to say, well over 25 years. And he's been blowing the CMBS whistle. So now, I know a lot of you don't understand commercial real estate. It's a fascinating way to invest in real estate. There's a lot less emotion involved because you're dealing with companies as opposed to people, you know, single family or multifamily properties where there's a lot of emotion involved in their daily lives. So I like commercial real estate. I've only had a couple little pieces, but I really, really want to get into commercial real estate when it collapses. So John's been out blowing the whistle about this market, and to give you an idea, he used to work at Moody's back in, I want to say 2002, 2003. So he understands very much so how these credit rating agencies completely have a past of lying and covering things up until it's too late, and then all of a sudden it's like, all right, you got us. But ironically, everybody forgets now. I think most people have forgotten all of the S&P, Fitch, and Moody's drama that happened in 08 with people going, what the heck? You said this was, you know, AA, AAA, and it's complete crap. And it's sad how people forget this stuff. All right. So I'm going all over the place. So commercial mortgage-backed securities. First off, there are usually groups of about 100 loans, commercial loans that are all wrapped together, and then they're sold into the market, okay? And they're sold into the market a couple different ways. The problem that the whistleblower, John Flynn, has been talking about, there's a few different things that have been going on in this market. First off, sometimes he's noted that 75% built structures, commercial structures, were being sold as if they were fully complete. So they would be marketed as fully complete, and they would sell for a price that showed hey, these are properties being sold. And when I say sold, not being sold to the owner of the home, I'm talking about the security being wrapped up the loan that was taken out on the property. It was taken out as if that home was fully built, and then that loan is packaged into one of these trusts or these groups onto the market. Okay, then you have commercial properties that had seen environmental catastrophes that were being sold and new mortgages put on them, and those environmental catastrophe disasters that had attacked these properties were going undisclosed. Okay, so an owner of a property would see like a hurricane roll through, it would be destroyed. They would eventually go and get a new mortgage on this, and they would not disclose it, and then that loan, that new mortgage, gets packaged up in these products and it hits the market. Okay, so we're talking about two totally different things. I want people to understand that. You're talking about a physical property that might have some damage, or that they're lying about, the owner's lying about and saying, hey, oh yeah, that property's finished. I just need a loan. The value on that property it's new construction. And let's say it's a $5 million property. They need a mortgage on it because we've already went through the construction process. And so the bank would give them a loan based on that $10 million, let's say, dollar valuation. But if you pulled up to the property, you'd say, this ain't done. It's not worth 10 million, but it doesn't matter. So you've got the physical property right in front of you, but what I'm talking about is what's going on behind the scenes with the debt obligations on those properties, okay? So now that $10 million loan now gets packaged into a product like a trust and gets sold into the market, all right? So you're seeing where I'm going here. There's these loans that people have taken are now being sold onto the market and put in pensions, hedge funds, money market accounts, or mutual funds, and the value is actually not there. It's all fake, okay? Now, the third thing that's going on is overstating income. And a lot of these properties, an owner of a massive, shopping complex would say, hey, you know what, I want to get a new loan. Interest rates have dropped. And they say, well, what's the value of the property? They say, it's $10 million. And they said, well, how is it $10 million? They said, well, I bring in X amount per month from this store, this store, this store. And if you actually did a forensic audit on it, you would find that no, they actually don't bring in that much. They're overstating the rent, or they're understating the expenses, all in order to be able to get as much money for that property and then take the money and then do whatever they want with it. And the sad thing is really in the corporate world, they can just walk away from these in bankruptcy. And I believe that you're about to see a lot of that in the next year. And that I know this is new, CMBS. I'm probably one of the only people talking about it on YouTube. And we'll start talking about it more, and I'll get more in depth, but I try and keep it very light and very easy for people to understand, okay, until we get more in depth, all right? So first off, now we've talked about the three different ways that people are lying and deceiving the market, right, with the value of these properties. Now what I want to explain is that these products, what they do is they can go into the market into different funds, but they also mostly are being put into trusts. These mortgages, about 100 or so, will be put into a trust, and then that trust is sold as a bond. Now, I believe that what you're going to see is the bond market actually imploding in the future. And that's going to cause, in my experience, and this isn't professional investment advice, I believe we're going to see much higher interest rates in the future. And I don't care what anyone says about the Fed front running. The Fed's a private bank, and at a certain point, they're going to go, you know what? We ain't buying any more of this stuff, because if the taxpayers don't pay us back, and I think that could happen one day, they're not going to be the buyer of last resort. So I think people should get out of their minds. Yes, for right now, they are. But they can only do it as much as the people have confidence in their ability to not lose control. And I think that's it's happening right now because countries are losing faith in the Fed, and it's shown by their asset purchases, bonds, T-bills, things like that. Kind of back in right now. So what I wanted to do is just give you an overview of the commercial mortgage backed securities and what's going on with the whistleblower case. And I think, now just so you know, this case started, the whistleblowing started approximately 2 years ago, I believe. And so it's a long process. But right now, what you're seeing right now, because you're here with the Economic Ninja, what I'm explaining to you is akin to what happened when I found out who Michael Burry was in 2005 and what they were trying to do to short the mortgage market. And everyone around me, first off, didn't know who Michael Burry was, but didn't care, right? And I was like, oh my gosh, this is huge. And so what you're seeing right now with John Flynn is gonna be akin, there's gonna be a day, there might be, where there's a movie about this guy and everyone's going, you know what, I remember being warned about this. And I think it's really exciting because it shows us the future. When there's so much fraud in the system, it can only last so long until it comes out and it implodes, because what happens is the big boys that have all the money, that know when this is gonna happen, they start pulling out. And that's all that happened in 2008. All right, guys, with that being said, I thank you so much for your time. The Economic Ninja is out.